Welcome back to Profit Pulse. Today, we're zooming in on the S&P 500, the stock market superstar, the rock star of investment indices. Whether you're just starting out or a seasoned investor, there's one question you've probably asked. Should you invest in the S&P 500? This video will break down what the S&P 500 actually is, the pros and cons of investing, and give you a roadmap to decide if this is the right move for your portfolio. We'll go over why the S&P 500 has become a staple for so many investors and, of course, share a few laughs along the way. So, let's get right into it. All right, so first up, what is the S&P 500 really? Think of it as a VIP list of America's biggest and most successful companies. The S&P 500 includes the top 500 companies in the US, like Apple, Amazon, Microsoft, and Google. These aren't just random companies. They're the powerhouses, the game changers, the corporate superstars. You're not putting your money in just one company when you invest in the S&P 500. You're investing in a little bit of all these giants. It's like a mutual fund that captures the heart and soul of the American economy in one neat package. Now, why is the S&P 500 so popular? First off, history and trust. The S&P 500 has been around for nearly a century, with a historical return rate that averages around 10% per year. Of course, we all know that past performance doesn't guarantee future results, but it's been remarkably consistent for decades. Some other reasons people flock to it: diversification without the headache. You get exposure to a wide range of industries and sectors without needing to pick individual stocks. Low-maintenance index funds tracking the S&P 500 are passive, meaning you don't have to constantly adjust or rebalance it. Growth resilience. Over time, the S&P 500 has bounced back from just about everything, from wars to market crashes. It's not a get-rich-quick strategy, but it's about as reliable as long-term growth gets. To invest in the S&P 500, you don't buy individual stocks. Instead, you buy into index funds or ETFs, exchange-traded funds that track the S&P 500. Some of the biggest names you might come across are Vanguard's VOO or SPDR's SPY. These funds hold shares in all the S&P 500 companies and follow the index. So if the S&P 500 does well, your investment does well too, and if it doesn't, well, it's down with the ship for everyone. But don't worry, if you're investing for the long term, these dips are usually followed by recoveries. This brings us to our next topic, the benefits of investing in the S&P 500. Here's why the S&P 500 has earned its crown as one of the safest long-term investment options: stable growth potential. With an average of around 10% returns over decades, it's one of the strongest growth stories in investment history. Low fees. Because it's passively managed, most S&P 500 index funds come with super low expense ratios, which can save you a ton over time. Reduced risk. Investing in individual stocks can be risky, but with the S&P 500, your risk is spread across a range of industries. If one company or sector struggles, others in the index might still be doing well. So in short, it's like a financial set-it-and-forget-it option. You buy in, hold it, and let time do the rest. All right, time for a reality check. The S&P 500 isn't flawless, and there are some things you should know before you hit buy. Market-weighted risks. The S&P 500 is weighted by market cap, which means the largest companies have the biggest influence. Tech giants like Apple and Microsoft can sway the whole index, making it less diversified than you might think. Short-term volatility. If you're looking to cash out in a few years, remember that markets fluctuate. The S&P 500 is a marathon, not a sprint. US-focused. The S&P 500 only includes US-based companies, so you're missing out on international growth. If you want exposure to global markets, you'll need a different fund. So who is the S&P 500 for? It's for those who believe in the long-term growth of the US economy and who can tolerate a little short-term turbulence for those longer-term gains. Who should invest in the S&P 500? Well, you should consider the S&P 500 if you're looking for a low-maintenance option. With index funds, you don't need to research every stock. If you're in it for the long haul, this is key. The S&P 500 performs best if you can leave it alone for at least 5 to 10 years. If you value simplicity, the S&P 500 keeps investing straightforward. No fancy investment formulas needed. Now, if you're looking to double your money in a year, the S&P 500 might feel like a snooze fest. Or if you want more global exposure, you might need to check out some international index funds to balance things out. Comparing the S&P 500 to other investments, let's break down how the S&P 500 stacks up against other types of investments. Compared to bonds, bonds offer stability but usually have lower returns. The S&P 500 will likely outperform bonds in the long run, but the bonds can be a nice way to balance risk if you're closer to retirement. Compared to real estate can offer high returns, but it's a hands-on investment. The S&P 500 is passive, requiring less time and fewer repairs. Compared to individual stocks, picking the right stock can bring huge gains but also major losses. The S&P 500 smooths out this risk. Investing legend Warren Buffett is a fan of the S&P 500 for everyday investors, saying it's often a safer bet than individual stock picking. So if the Oracle of Omaha says so, maybe there's something to it. How to get started? Getting started with the S&P 500 is simpler than you might think. Choose your platform. You'll need a brokerage account. Popular options include Vanguard, Fidelity, and even newer apps like Robinhood. Select your fund. Some of the top S&P 500 index funds are Vanguard's VOO, SPDR's SPY, or Fidelity's FSI. Decide your investment strategy. You can start with a lump sum or go with dollar cost averaging, investing smaller amounts consistently over time. Stay consistent, make it a habit. Whether it's monthly or quarterly, staying consistent with your contributions is key. So, should you invest in the S&P 500? If you're here for long-term growth and don't mind some short-term dips, it's a solid choice. Remember, investing isn't about getting rich quick. It's about building wealth steadily over time. The S&P 500 is a tried and true method for growing your money alongside America's biggest companies. Let us know in the comments below. Are you already invested in the S&P 500, or do you have other favorites for long-term growth? Don't forget to like, subscribe, and stay tuned to Profit Pulse for more money tips and financial insights that keep your profits pulsing. Thanks for watching, and until next time.